Welcome to the DuPage Federation's presentation on the Child Tax Credit. The American Rescue Plan, also known as ARPA, made some changes to this child tax credit. Today's presentation will provide an overview of who is eligible for the tax credit and what some of those changes are. Information in this presentation is current as of June 29th, 2021. For the most up-to-date information, we encourage you to visit the IRS website at irs.gov. First, a quick mention about the American Rescue Plan, which is one of the more recent relief packages passed in response to the COVID-19 pandemic. The American Rescue Plan is a significant piece of legislation providing relief in terms of cash assistance directly to families, but also is making significant investments in communities. And if you haven't heard already, there are multiple opportunities coming to various sectors, whether that's services providing housing and homeless prevention services, investments in childcare, education, health coverage subsidies, and much more. There's investments to states and municipalities in response to the pandemic. But today's presentation will focus on the child tax credit. So first of all, just a mention of what is the child tax credit. So this is a tax credit that has already been in existence. It is not a new tax credit, but what the American Rescue Plan did was make some changes to it. Essentially, it is a tax benefit for those who pay taxes in the United States. So even though the slide says a tax benefit for American taxpayers, what that means is it's really for those persons who are paying taxes in the United States. It's not that the taxpayer themselves must be an American. But it is a tax benefit for those who file taxes in the United States and who have qualifying dependent children. And we will define what a qualifying dependent child is for this tax credit. So what did the American Rescue Plan change with regards to this child tax credit? Well, first it is increasing the amount of the annual credit. So in 2020, families were able to receive $2,000 per child annually for any child under 17. And what the American Rescue Plan is doing is increasing that annual amount to $3,000. It may be helpful to point out that usually taxpayers receive this credit when they file their tax returns. And so, usually the due date for filing tax returns is April 15th of every year. And so when people claim their tax credit, this child tax credit is received then, either as part of their refund or maybe it offsets any taxes that someone may owe. So on an annual basis, thanks to the American Rescue Plan, now for this tax year, when people go to file taxes next year, they can receive up to $3,000 per child under 18, and a little extra if the children are under age 6, so up to $3,600 per child for those under age 6. So that's the annual credit and the increase. The other thing is that what they've done is make the 2021 tax credit fully refundable. What that means is even if someone did not earn any income or did not have to pay income taxes, they can still benefit from this provision. And the other change that we are hearing about a lot and receiving a lot of questions about is the fact that the IRS is going to start providing advance payments as of July 2021. And so families will be receiving monthly payments, and it really is an advance tax credit. That means the amount that they are receiving from July to December it will equal about half of what their annual credit is. And so their tax credit that they usually get every year at tax time will look a little different next year because they're already receiving it in advance. And we'll talk a little bit more about that. So when will these advance payments begin? The IRS is planning to distribute these advance payments starting on the 15th of July, and they'll be distributed on the 15th of each month. In terms of the amount, those monthly payments will equal about $250 per child under 18, or up to $300 for children under age 6. And they will issue these payments based on someone's 2020 tax return. And it will be direct deposited into the account that anyone's tax refund or with whatever bank account that the IRS has on file. And we'll talk more about how people can update their information in a moment. Who can get the advanced child tax credit? Well, first of all, taxpayers are eligible if they have a main home in the United States for at least more than half the year. So that's one of the criteria. I've already mentioned this, but it's worth stating again that these advance payments will equal about 50% of their annual child tax credit because we're talking half of the year, right? And the IRS is estimating these amounts and who is eligible based on what people filed for their 2020 tax return. Now, if someone for some reason did not file a tax return in 2020, for whatever reason, perhaps they requested an extension on their filing deadline, perhaps they're not required to file a tax return due to not having any earned income. For whatever reason, if they did not file a tax return in 2020, but there was a 2019 return, the IRS may look at that as well. There's also an opportunity for people to enter and update their information in the IRS portal. I think it's important to mention here, and I'll mention it again later, but if someone's income has significantly changed since last year, they may want to update that information in the IRS portal. Because the reality is that these tax credits are reduced for families who have higher incomes and eventually phase out. And so for families who are filing taxes as a married couple who file jointly, once their income as a couple is over $150,000, that tax credit really is reduced, and at a certain point will phase out. And it's over $75,000 for all other taxpayers. So again, if someone's income drastically went up since they filed last year's tax return, they may want to update the portal so that the IRS has the most current and accurate information for their income. We also receive a lot of questions about immigrant eligibility for child tax credit, and the ARPA, the American Rescue Plan, did not change this eligibility, right? The overall criteria is that the child who is being claimed must have a Social Security number. So the child themselves must have that Social Security number. The parents must be filing taxes, and they can do so either with their own Social Security number or if they are filing with an ITIN. Again, as long as the child is eligible based on that Social Security number, the parents, as long as they're filing taxes, may claim the credit. So we do have undocumented individuals who file with ITINs, and they may claim this tax credit. In addition, DACA recipients, Deferred Action for Childhood Arrivals, are also eligible as long as the children have that Social Security number. Just a quick refresher, DACA, Deferred Action for Childhood Arrivals, while it's not an immigration status per se, it does provide protection and defers deportation, and it allows individuals with DACA status to remain in the United States and to work lawfully. And so DACA recipients actually do receive a Social Security number for work purposes only. But again, the eligibility for the child tax credit really is based on that dependent child's status, and that child must have a Social Security number for the parent to receive. I know there are many questions about how will receiving the child tax credit impact immigration status, and you may reassure families that it does not impact. The tax filing system, the tax payment system is separate from the immigration system. Use of the tax credits or receiving tax credits will not be a part of any public charge determination. In some cases, the fact that someone is paying taxes in the United States may be beneficial down the road if there were any kind of protection offered later. But receiving the child tax credit really, again, is based on tax rules, has nothing to do necessarily with immigration status, and will not impact someone's ability to apply for a green card or any other immigration plans. So what do taxpayers need to do to receive the advanced child tax credit? It's not stated on the slide, but essentially they don't need to take any action unless they haven't filed their 2020 tax return yet. And so taxpayers with children should either file that return as soon as possible if they've not done so already. If they are usually not a tax filer, then what they will want, but they could claim this, what they will need to do is submit their information to the IRS. And so there is a way to sign up for the child tax credit through the portal on the IRS website. This may be for undocumented parents who've never paid taxes before, and now maybe they want to start doing so, and it could be for other non-filers as well. I've included the link here on the website, but essentially you can not only sign up for the child tax credits, you can update your information on this website, and in addition, families can opt out of the advance payments. And we'll talk a little bit about who may want to consider opting out. This is a screenshot of the IRS website. There is a lot of good information on this website. There's also a significant frequently asked questions section about the child tax credit, so I encourage you to visit the IRS website. But you can see here where someone could unenroll or where they could submit their information. It also gives a brief overview of who is eligible or who will start getting the advanced payments. But let's talk a little bit more of opting out of the automatic payments. Why might someone want to do that? Well, if families usually don't receive a refund when they file their taxes, they may want to opt out. For example, sometimes the child tax credit amount that a family would receive actually offsets taxes that a family may owe. And this is really individually based, right? It could be that someone is self-employed and has a lot of income or expenses and different things, and maybe the way it works out is that they would actually have to pay taxes. So these families who don't usually receive a refund, they may want to opt out. I've already mentioned people whose income has drastically changed. We all know that there have been many people who lost work, whose income decreased due to the shutdowns and the significant changes in our world due to the COVID-19 pandemic. Now we are hopeful that the economy is recovering, and perhaps what people earned last year has drastically changed due to being able to now go back to work or maybe even have a higher paying job. So those parents whose income has significantly increased and maybe is above that $75,000 or $150,000 for a couple threshold, they may want to opt out. Again, if they're eligible, they may be able to get this tax refund in their large lump sum next year. But if they're unsure, they should either consult with a tax advisor or think about opting out. What we may see more often is situations where parents who claim their children every other year. So when you have a couple who is separated or divorced and they share custody of their children, it's very common in divorce settlements for the parents to alternate which tax year they claim their children. So for example, if I claimed my child for last tax year and now it's my ex-spouse's turn to claim them at next year's tax filing time for the 2021 tax year, the IRS is going to start sending me the advanced tax credits because it's based on the 2020 tax return. But if it's my ex-spouse's turn to claim the child, for this current tax year, really that advanced payment should go to that ex-spouse. So again, parents who claim their children every other year may want to opt out. They may want to talk to a tax advisor first as well. And then some families are used to receiving the child tax credit as one large lump sum at tax filing time. And so they plan either to address some big expenses, at that time when they get their large refund. And if they still want that large refund rather than these advanced payments, those would be others who would opt out. But again, the thinking behind offering these advanced payments is that families are still struggling, especially those with lower incomes, right? And so that's why it may be a benefit and really help continue to make ends meet for certain families who are struggling. But again, just wanted to highlight a few things about people who may want to opt out. Now it's too late to opt out for the July payment because again, the IRS is automatically distributing these advanced payments. So families who wanted to opt out for July needed to do so by June 28th. So if someone gets that advance payment this month in July and decides, no, I don't want that for the rest of the year, they can opt out by August 2nd. Once someone opts out, they are not able to opt back in. So they really need to make that decision. What's best for their family? Is it best to receive the tax credit in advance, or would they rather receive it at tax filing time? There are a number of resources available about the child tax credit. Again, I can't stress enough, the most accurate information is going to be directly from the IRS, and so please visit there. For those of you who work with immigrant families, CLASP has put together a wonderful fact sheet about this. This fact sheet actually gives a really nice overview of the child tax credit, but also talks about those families who may have mixed immigration statuses and who can benefit. The CLASP website also has a Spanish language version of this fact sheet. And then the Kiplinger website is just kind of something where people can enter in their information to see if they're eligible and how much they're eligible for with the child tax credit. It is always a good idea to refer families to free or low-cost tax advice or financial advice. The IRS actually has the VITA program, the Volunteer Income Tax Assistance Program. This is free tax preparation and free tax advice for lower income families, persons with disabilities, as well as those who have limited English proficiency. Now, unfortunately, part of the challenge is that often many of these volunteer income tax assistance programs are active in the spring during tax season. So not all of the agencies who usually offer this may offer it right now in the summer of 2021. But you can do an internet search to see if there are any active. I will say I recently conducted a search for the Chicago metropolitan area and didn't find very many on the IRS website, but when I did a separate internet search, I found some other agencies. So it may be worth looking into that. In addition, if you are serving families in the city of Chicago, there is a free tax prep division within the city offices, and there may be other resources in other regions of the state. That's all we're going to talk about today in terms of the child tax credit. Briefly, I just wanted to mention some of the other tax provisions that were impacted by the American Rescue Plan. But please know these provisions don't have an advanced payment feature. Rather, they will be claimed at tax filing time in the spring of next year. So the two are the Earned Income Tax Credit as well as the Child and Dependent Care Tax Credit. So what is the Earned Income Tax Credit? This is really a tax break for those with lower or more moderate income. Someone has to be working and earning income, and how much someone gets really is dependent on a number of factors, including whether or not they claim any tax dependents, have children, or if they're disabled. I already mentioned this, but to receive the Earned Income Tax Credit, it's in the name, right? Have to be earning income that meets the thresholds. In addition, to receive this, someone must have a Social Security number that allows for work. And if someone is claiming children on the tax return, it must be a qualifying child. So what that means is tax filers who are filing with an individual taxpayer ID number cannot claim the Earned Income Tax Credit. It specifically requires that someone has a Social Security number that is their own and that provides for work. That also means that children who are claimed due to an ITIN cannot be considered as well. Even if the tax filer has the Social Security number and maybe they have 2 children, but one is claimed with an ITIN, they cannot get the tax credit based on that child. They may be able to do that if the other child has a Social Security number. And then I just wanted to briefly review, well, what do you mean by a qualifying child, right? Who can be claimed as a qualifying child? And this is an IRS rule that's really based on relationship age and where the child lives. So this screenshot actually is from our partners at Health Reform Beyond the Basics. And essentially the child, again, that relationship, it is a child, whether it's their own child, or a grandchild or some other relative that they are able to claim as a tax dependent. And then you can see that the child is either a citizen, a U.S. national, a resident, or a resident of Canada or Mexico who lives with the tax filer for more than half the year. So that's what we talk about residency. That child has to be either under age 19 at the end of the year or a full-time student or disabled up to age, a full-time student up to age 24, or if the child is disabled, it can go beyond age 24 and they can claim them. And then the child can't be providing more than half of their own support. So for that, 21-year-old full-time student who's also working, maybe they're paying, for most of their own support, then that wouldn't be a qualifying child. So these are IRS rules, but just wanted to briefly review them. So this Earned Income Tax Credit has also been around, right? And so what did the American Rescue Plan do? It made some temporary provisions. And so essentially it's increasing the amount that workers can receive, and workers without children in particular. And so you can see it's increasing it from $540 up to about $1,500. In addition, I had mentioned at the beginning, this was really for lower income workers, and they are increasing that income cap to about $21,000. But these are temporary provisions just for this tax year, for the 2021 tax year. In addition, what we saw before was that younger or older workers really weren't who were childless really didn't benefit from this. And by childless, what that means is they didn't claim any dependent children on their tax return. So what they've done, though, they have expanded the age range for these workers. Again, more resources and the more accurate information will be available on the IRS website. And then last, I just want to mention the Child and Dependent Care Tax Credit. So this is a tax benefit for those who file taxes who are paying for childcare or dependent care, and they have these expenses so that they can work. And so usually what it is, the expenses that someone pays, there's a percentage of those expenses that really translate into the amount of tax credit they receive. Again, this is something that is claimed when filing taxes at tax return time. And what the American Rescue Plan was increase the percentage for this current tax year. So who is a qualifying individual? If you're paying for dependent care expenses, you know, who counts for those expenses? So one, dependent qualifying children under age 13. So if you're paying for daycare or after school care or summer camp programs that essentially are caretaking for the children under 13 so that the parents can work, those children qualify. Can also claim these expenses if it's for a spouse who was unable to care for themselves and lived with the tax filer for more than half the year. And for other individuals who were unable to care for themselves, if they live with the tax filer for more than half the year and that individual is either their dependent or could have been their dependent, except that individual who can't care for themselves receives income of a certain amount. Think in this case of elderly parents that a tax filer may be claiming. If you want to learn more information, the IRS has a lot of information about this as well on their website. It's also important to understand that those expenses can be paid for care that's either in or out of the home. So it doesn't necessarily have to be a home caregiver, but it can be a provider out of the home. Some more information, just what needs to be reported. So the care provider, we must be able to provide either a social security number or the employer identification number of the care provider. So if someone is paying a care provider and that care provider is undocumented, perhaps, they may not be able to claim those expenses because you have to be able to provide either a social security number or that employer ID number that is filed with IRS. In addition, can't claim expenses if it's a spouse or the parent of the child who's providing the care, right? The IRS isn't going to pay parents to watch their own children. And then also, please know that the Child and Dependent Care Tax Credit is available to those tax filers who do file taxes with ITINs. So in this case, you know, the qualifying child has to meet those qualifying child rules, and the provider, the care provider, has to meet some rules in terms of having identification. If you are interested in learning more about other provisions within the American Rescue Plan, the Center on Budget and Policy Priorities has created the Federal Scoop website and provides a breakdown of the various funding sectors. So whether you're interested in housing and homelessness funding or education or childcare or more, this is a great resource. Also have given you another link for more information about the American Rescue Plan. If you have any questions, you are welcome to reach out to Kristen Hartsaw at khartsaw@dupagefederation.org. Thank you for viewing our presentation.